Welcome back, all my fellow traders. In this video, we are going to go over the opening range breakout trade, or ORB trade for short. So who is the ORB trade good for? If you are a trader who has very limited time in the mornings of your session, that can be Asia, New York, or London, and you are looking to get a trade out within the first 1 minute, 5 minute, 15 minutes, or 30 minutes, and then leave for the day, then this strategy is for you. So keep it locked right here. I'm going to talk you through everything you need to know for the opening range breakout. Don't forget, drop me a like and subscribe right now so you are ready for all the hot new content I drop every single week. If there's a subject you want me to cover, make sure you drop that in the comments and I'll do my best to get to you. So let's get into it, the ORB trade. The first thing to know about the opening range breakout is its key principle. It requires a range for this setup to happen. Now, most of the times you will get a range during the opening bell or soon after the opening bell. But how does the market like to move, right? We like to trend, don't we? And after a trend, we often create a range. And then after the range, we normally break out. Or the other option is we do a failed breakout, all right? So the opening range trade, the ORB trade, is really taking advantage of these breakout scenarios. So you need a range for this to be present. So let's just think about this now. This is your opening range. Let's say this is an opening range. From this range, right, we can effectively create a box. Of course, you can do a line each side of this. So this would be your range. Now, when we are doing an opening range breakout play, we are looking to exploit these stops who are trapped in this range. So you've got buy side liquidity or short stops on the top side of this, and you have sell side liquidity or buyer stops on the bottom side of this. And you will be looking to place a trade on a breakout. So if I'm thinking that I'm looking for a short, all right, I'm looking to take a sell through this level right here. So I'm looking for a limit sell or a stop limit sell through this level. Even better if it wants to come back and retest before moving lower. This is in essence the opening range break trade. And of course, to the upside would be the complete opposite, all right? You would be looking to take a limit buy order over this level. So you could set a stop buy order and you would be looking to trigger once it has broken out through this level, all right? So you would be looking for a long right in here and exploiting these stops to the upside. One of the key points I need to go through before we go any further is you need to make a decision what time frame you are looking to create a range on, because different time frames will create different ranges. Lots of people will simply create a range out of the first 1 minute bar that prints on the market. And if the market wants to move outside of that 1 minute bar, they will be taking either a buy or a sell outside of that range. Don't worry, I'm going to show you exactly what I mean. Other traders might be looking at the first 5 minute range or 15 minute range or 30 minute range, or even the first hour, which is exactly what the initial balance play is. So understanding the time frame you're looking at is key. Now, of course, if you take the first 1 minute range and you scalp that, you could then look for the next 5 minute, the next 15 minute, the next 30 minute, and then be done for your day. So it does provide ample opportunity. So let's just think about this now in terms of bars and structure. Okay, then the opening range breakout. This is a brand new chart. This is a 1 minute chart. Okay, and we have had a significant gap down. Now, gap downs can often be for gap and goes to the downside if you understand fibs. I will pop that video underneath so you can understand how gap and goes work. But here is your opening range, right? So any move above this 1 minute candle to the upside, I'm going to be looking for longs, and any move underneath it to the downside, I am going to be looking for short continuation trades. Now, before I go any further, it's very, very important that you understand the opening range breakout trades are not highly probable, okay? They are scalping trades. This is not a trade you want to sit in for ages. They can work very, very well when you start to understand the nuances of it. but really you want to be locking in for one-to-one profit, or at least the majority of your trade needs to be locked in for one-to-one profit. So let's see if that works out today. There's our opening range. This is your 2nd-minute candle. We are still inside of the range, so no reason to take action. And here now we have a short. All right, we have triggered the breakout because we came outside of this range. So what am I thinking? Straight away, I want to think about a one-to-one risk reward. So let's just measure this down, shall we? We can squeeze this right down to the top of the range, which is where technically I should be risking. And we are going to look to exit when we get near a one-to-one. Pull this right up. All right, and there's our one-to-one trade. So if we complete a one-to-one trade, we are going to exit the position. So next bar, and there we go. So I'm going to take that off, and there's my first trade. Okay, first trade complete, 1 for 1 on the opening range break because we are scalping. Now I can move this range all the way down here. Why am I doing that? Because we now have a 5-minute range, right? 1, 2, 3, 4, 5. This is our 5-minute range. So this is the second setup for the day. Can we create a range here, trap some more liquidity, trap the stops, and look for a either continuation trade or a breakout trade to the upside? So let's continue this on. All right, coming back inside the range, no closure outside. That looks a bit stronger. That's still inside the range. Still inside, still inside. All right, not willing to take this, dancing up, testing the top of the range now. So remember, if we break out to the upside, going to be looking for longs. All right, and I just want you to now notice the time. Now it's 9:45, so the market's now been open 15 minutes, which means the opening range for the 5-minute traders and the 15-minute traders is exactly the same. All right, so you've got lots of traders now looking at the same thing. Let's see if we can get a continuation. Right, so this is the first time it's showing a willingness to move out of it. Now, ideally, we get a candle like this where it comes back and it tests it. So here we go. We are in short yet again, and now we need to think exactly the same way. Can we get a one-to-one trade? So I need really to risk to the top of the range, and we're going to get a one-to-one. Now, I very, very rarely actually risk to the top of the range because I would find that if it starts to break these previous candle highs here, which is in the middle of the range, it's likely to rotate all the way to the top, and then I'm not interested in holding it. So let's see if we can get this one-to-one. Comes close. Coming back inside. That's a very good sign that it's held. And there we go. So a one-to-one again, another trade, and I'm taking it off. Right, I'm not willing to hold past the one-to-one in an opening range breakout. Now, there are, of course, times where it will end up going 5-to-1, 6-to-1, 7-to-1. You're not going to get those regularly. What you are going to get regularly to increase your win rate in this is a 1-to-1 risk reward. So let's continue this now. We are now into the first half an hour. Now, I wouldn't say this is necessarily a ranging market now. We now have a downtrend. You need to understand structure and not try and fight it. So we are expanding. Let's see if we can come back inside this range now. Very interesting. This now is a new range, right? Now I'm pretty comfortable that we're creating a new range here. So we can increase this down here, right? Because we're back to the midpoint. Take that off. Let's just see what we do. If we dance around a little bit, there's our first break over. Doesn't look that willing. That looks a little bit better in terms of it's trying to flag, but nothing showing confirmation. It's just dancing on top. There's the retest. Looks pretty good. I am interested in this. The problem is, if it's not going to show me a willingness to really start expanding and coming and retesting it, at this point in the market, we're coming towards the IB high, right? So now we're an hour into this range. I'm very aware of that IB high. So it's important you understand what the setup is and what you're near to. And that's the problem. That's the IB high set at 10:30. And that's the only reason I wasn't interested in taking that, because the rotational trade back inside is extremely probable at this point. It doesn't mean it doesn't set up later. So back down into the midpoint. We can just speed this up. All right, so we're very, very clearly in a range here. And it's clearly identified. And truly, we can probably move this up now. All right, so this is now no longer really an opening range breakout trade. This is just a range trade, but the same principles apply. All right, we come up, fails the top of that range again. You see how clean these are. All right, understanding your levels becomes very, very key. Still failure to break outside. There's our first break. That looks better in terms of a retest. Now, I don't mind doing that, and I don't mind if it dives back inside a little bit. Holding that range, that's really bullish now that we've held that, so much so that it's gone out of the screen. All right, so in terms of a one-to-one, all right, this whole range would be absolutely massive, but you could in fact measure that for a potential take profit, all right, which would look like this. So obviously we've already exceeded into the 161. Let's see if we can actually get a one-to-one trade on this. Almost there. And there we go. We had it there. Maybe we get one more tap. It would be kind. There we go. All right, so another range breakout. Yes, not so much the opening range breakout, I know. That's kind of more like an IB high break and retest model. But now you understand that the IB high really is just the opening hour range. And that's why it's really important, because ranges, they build liquidity. They build stops inside of that range. And it's that liquidity that we use. We use the stops to go higher. You use short stops to go higher, and you use buyers stops to move lower. I just want you to note that we took 3 trades here, okay, and we are done into lunch, 3 trades for $2,375 with very little drawdown. So range trades do really work. It's just understanding the nuances. So let's go through some of those nuances now, which when you trade this more and more, you will start to see it set up. The first thing I want to go over is the failed breakout of a range or a trap. When or why does that happen? All right. Why did we fail to move lower down here? The key to that is understanding the higher time frames. If you mark out your supply and your demand, or your support and resistance on the higher time frames, it will allow you to see where people are wanting to get involved, where those liquidity pools are. Now, I know for a fact down here was a block on the H4. So if I go to a 4-hour chart, just zoom out a little bit, and I need to put back on extended trading hours. All right, you can see that right down here, we had a fresh demand block, okay? So this was key, all right? If you understood that this was a fresh demand block, it would have helped you understand that looking for a short in and under this demand block was very, very high risk. So understanding the higher time frames can really help you. If I go back to the 1 minute chart now, you will see why we reacted here, all right? So that gives you good confidence that you should be covering down here. You shouldn't be expecting too much, which is why those one-to-one risk rewards work very well. What's the next thing we can think about? We can think about these gaps, can't we? We can think about the gap extension and the gap fill plays. So once we start coming back above that 930 print, that key print, then we are much more likely to start filling this gap, if not all the way, part of the way. So that's another reason why this bullish breakout was really, really effective, because we had very light liquidity here over the London and Asia session, which means it was very easy to get through. So this breakout long had high confidence that it would come and close that gap. Okay, so understanding again the bigger picture is key. The third thing I want you to consider is how long we've been in a range. The longer time we have spent in that range, the more likely that it's built liquidity. So if we just look at this example here, right, I want you to think about how many short stops are up here. So many. And if they didn't take their profit down here and they added back in here, okay, once we start getting up here, they are starting to sweat, aren't they? So if they don't stop out on this breakout trade, all right, this time right here where you can get long, the moment this returns back into their level where they should have stopped out, they are going to take that trade off for a break even. And it's them who activate that cover, which gives us the ignition to go higher. That's why a break and retest model works really good when we've been in a range for a long time. Now, it won't always retest. You have to understand that sometimes the breakouts, they will just go, and so be it. Then you can look for a momentum trade and a pullback trade. But if it gives you that break and retest model after being in a range for a long time, like this here, we're in this range for almost 3 hours, it's a fantastic opportunity to get long. A tool you can use for confluence when taking an opening range breakout is the volume. So here is a volume indicator underneath. Now this volume indicator is really cool. It manages to show you all the buys and the sell volume within it. Now I just want you to notice this breakout right here. Let's just mark this up. This breakout right here comes with increased volume. So you can see we have declining volume all the way down, and then we have this pop, all right? And that pop is the stops getting run. And when we come back inside again, we sustain this kind of volume while we push out, okay? That is a key trigger to give you confidence that this is likely to hold, all right? If we did this breakout here and there was no volume in there, that would not give me confidence that we were likely to rally higher. So that's just another little pro tip that you can use when taking the opening range breakout. The last tip I want to give you is on how to hold runners. So let's say that you took this long right here, or maybe you took this breakout trade right here, and you don't know how far this is going to go. So of course, we talked about today, you had a gap fill, but you're not going to have a gap fill opportunity every day. So how can you think about it? Well, we can do fibs, can't we? The first thing we can think about is a fib. So we could do a fib of this pullback leg, and you could look for a 1-to-1 ratio, which it of course gave you, or multiples of, or the 161. There's lots of ways of doing this. If you can't see any resistance or supply to the left and you're looking for another way of doing it, and you don't want to do a fixed risk reward, you can of course use EMAs or SMAs. Now I use a stack of them that I called the flow zones. So if I put these on here, you will see that at this moment right here, they started to curl, all right? They went from a bearish move to a very bullish move. Now, the way I would do this is I would not get out of this until price flips these red, which would be right here, all right? It gave you a massive trail. Now, how could you do this? You could use a 9 SMA or EMA, a 13, a 21, a 34, even a 50. It's totally up to you. The lower the EMA, the more sensitive it's going to be for price action. So it all depends what type of trader you are. If you want to give it room to breathe, use a slightly higher EMA, like a 34 or a 50. If you're looking to really navigate this market with tight stops, use a 21. All right, even with this, it would not have got you out until all the way up here, which would have offered you 15 to 20 points, more than enough for you to make your money on the day. There you have it then, everything you need to know on the opening range breakout trade. You can trade it after 1 minute, after 5 minutes, after 15 minutes, after 30 minutes of range, or even after an hour of range. The key is identifying the range, identifying where you are in the higher time frames, not being too greedy, looking for that 1-to-1 risk reward profile and locking it in. For confluence, you can use things like supply and demand, gaps, fibs, and even EMAs and SMAs to help you with a trailing stop to keep you profitable. Hopefully, I'll see you again on the channel real soon. Don't forget, hit the like and subscribe. I'll be back really soon. Use hard stops.